Hey there, welcome back to this renting shares case study. Let's just recap where we got to. Just go to the whiteboard and just take stock of where we are. So we're currently sitting on the 3rd of January and we've just gone and executed our renting shares trade. What we did was bought 2,500 Microsoft stock at $27.27, which cost us $68,000. We then went and sold our options contract, which is the vehicle we use to rent these shares, and we sold 25 contracts, which is equivalent to 2,500 shares. And the instrument we used was the call option, which is the C. It was the $27.50 strike price or rental price, and that's given by this line here, and the period is given by the start and finish of the line. And it was as I say, the February 13 contract, which expires on the 15th of February. And that's a 5.5 week duration rental agreement. And when we rented those shares, we received 68 cents per share, or a total of $1,700 rental income. We went through the two scenarios then. If the stock price stays below the $27.50 through to the expiry of the contract, then we get to keep the rent, of course, and we get to keep our stocks and we can go and rent them out again. The return in that case would be $1,700 over our committed cash, which was the amount of the stock less the income, which gave us a 2.5% return in 5.5 weeks, which is 23% annualized. If the stock price, on the other hand, goes above the $27.50 price point by the expiry date, then we'll again get to keep our rent, of course, but we'll be asked to sell our stock. And if that happens, that's not too bad either, because what that means is we get to keep the $1,700 rental income, of course, plus we get $575 profit on the sale of our shares. We bought them at $27.25 and we'll be selling them at $27.50. That gives us a 3.4% return, or 32% annualized return. And don't forget, you've got to take brokerage out of that, so it'll come down a little bit. The other advantage of this renting share strategy is that it gives us a risk-reducing price point. Basically, our break-even reduces, and it's reduced to $26.59, or 2.5% downside protection. So what that means is the stock price that we bought for $27.27 would have to fall all the way to $26.59 before we lost a cent. That's why it's a risk-reducing strategy, and that's why it's so good. Okay, now let's go back to iTrader and let's just start stepping forward, and let's go through the thought processes as we follow this trade through to conclusion. So we're currently 3rd of January. I'm going to step forward now to the 4th of January, and we're going to watch this stock. Okay, so it's dropped in price. Again, not a big concern to us. It's still tracking between these two ranges here, which is what we kind of are expecting. Nothing's guaranteed in the stock market, of course. But again, we've got downside protection, so we're not too concerned about that price fall. Price is still dropping a bit. And now let's see if it does. Okay, so it is starting to bottom at this support line again, which is fine. And it's definitely bounced back up there. So really there's nothing for us to do here. If we look at our account, we can see that the rental agreement that we sold for 68 cents is now worth only 38 cents. And the reason for that is two things. Firstly, the stock price has fallen. When the stock price falls, it goes further away from the rental price. That means that the rental premium drops automatically. Okay, so the further the stock price falls, the lower this will become. The other thing influencing this price, and it's something we'll go into a lot more detail later, is what's called time decay. When we're dealing with options and when we're short options, when we've sold the options, every day that ticks by means that the option value will naturally decrease as a result of time decay. The closer we get to the expiry of the rental agreement, the lower the time component of this price is. And again, don't get too worried about it. I'm going to go into a lot more detail of this in a later session. So for now, just take note that we receive 68 cents, and we could in fact today buy this contract back for 38 cents if we wanted to and make a clear 30 cents profit. But we'll let it run. The time is in our favour. We'll let it run, and hopefully we'll be able to just bank the whole 68 cents and even perhaps keep the stock, or even if we're asked to sell the stock, we still make a profit on the sale of the stock. So it doesn't really matter either way. So let's keep going forward. Oops, sorry about that. Just want to get that account window back. There it is. Okay. Currently 11th of January, expiry is on the 15th of February, so we are now 1 month out from expiry. Stock has gone back up. Again, nothing to be too worried about. And in real life, of course, you do a daily check on your rental contracts just to see how they're tracking. You don't need to sit in front of the computer all day. In fact, you're encouraged not to. Just check them from time to time, make sure there's nothing unusual. Just keep an ear out in the news for anything influencing your stock, and just track forward as we go. So again, nothing particularly to worry about. Let's just take a look and see what's happened to our rental price. Okay, so the stock price has come back up a bit, and so too has the rental price. So again, nothing we need to be concerned with. Let's just keep going forward. Stock price has gone back up. It's now sitting at 27.61. Okay, now this candle is now above our rental agreement price. So it's currently trading at 27.61, and our rental price or our strike price is 27.50. So now it is said to be, because the stock price is now above our rental price, it's said to be 11 cents in the money. That's the technical jargon. It's called 11 cents, and that's because it's 11 cents above our rental price of $27.50. It's said to be 11 cents in the money. Now, what will have happened to our rental agreement or our rental price is it will have actually gone up. Okay, so it's now sitting at 60 cents. We sold it for 68, and it's now sitting at 60 cents. If the stock price continues to rise, it's going to continue to go up. And of course, if the stock price stays at this level through to the 15th of February, we will be asked to sell our shares because it is above the $27.50 strike price or rental price. So now, under what situations or under what conditions would you consider closing out of this trade? Closing it out and losing 60 cents of our 68 cents that we received. Well, the only real time that you'd perhaps consider doing it is if you're talking to your broker or you have knowledge of the fact that this Microsoft stock is in fact going to take off. It's actually going to rise substantially. If that was your belief, then perhaps you might consider closing this position out. And taking a haircut on the rental premium that we received. But if that's not the case, then in most cases it's best just to let it run. Let it run to expiry, and take whatever scenario you get dished out. Either way, it's a win. We either make profit just on the rental income, or we make profit on the rental income plus the sale of our shares. And again, I'm usually in favour of not closing them out, because you close them out and you get back into the situation of becoming a buy and hold investor. We're not buy and hold investing here, we're buying and renting. So my recommendation would be to stick to the strategy and just let it run. Let's see what happens. Okay, 23rd of January, we've got a little while to go yet. Let's keep going forward. So this thing keeps coming out. I just need to cursor over it to get rid of it. Okay. Alright, so the stock price is still sort of tracking up a bit. Yeah, so it's still definitely in the money. We're now, what is that, 41 cents in the money. Okay, so definitely we would be asked to sell our shares if it stayed this way through to the 15th of February. So we're now at the 30th of January, 31st of January, 1st of February. We've got 15 days to go, 2 weeks to go. Stock price is still in the money by 43 cents. There would be some more time decay, though not much. It's still around 66 cents, the rental price. And again, I'd be saying let's just run it. Okay, you can see now here's the dilemma. And here's the dilemma with buy and hold strategies. You get this run up in price, and then it falls away again, and you're left with nothing. With renting shares, as I've said time and again, it's all about extracting cash, and that's why we should just let this thing run and see what happens. And again, if at any point you want to see what's going on that's caused any of these price drops or price rises, we can in fact just go back to the news archive, and I encourage you to do this often to make this experience as real to life as possible, so you get a very good handle on exactly what's happening around the emotions of the day. Bullish technique with support at 27.30. So you can actually, even review broker advice at that time and get a handle on which brokers are giving the best advice to make your trading even more successful. Let's keep going. Now look, it's coming back down. We're now out of the money. We're not in the money anymore. So it's bouncing around our strike price of 27.55. Back up to 27.86. 4 more days to go. Let's just see what happens. Okay, so again, we could still close out at this point if we wanted to, and still bank, 24 cents profit times 2,500. But again, I would say let's just stick with it. So it's still around the 20, still in the money by 38 cents. 2 days to go. 2 days to go. Okay, so what would you do in this situation? We could close this out and bank 23 cents profit, or we could let it run. Again, I'm going to let this run. In fact, what I might do in the next session, if we have time, I'm going to let this one run. Next session, though, I think I might come back and we might take the alternate approach. At this point here, we could close it out at 53 cents. I might come back next time in a few days and we'll take the alternate approach, and I'll show you how it would work if we wanted to actually close this position out. But for this particular exercise today, let's just run it through to expiry. 1 day to go. It's currently trading 54 cents in the money. Chances are tomorrow we will be called to sell our shares, in which case we will do, and we can see that those shares have been sold on our behalf, and we no longer own them. And if we go to our bank account, we can see this was the original deposit. This is where we sold the shares. We bought the shares in the first instance. We rented them out, and this is where we've just been exercised. This is the option that was exercised, and this is the transaction that sold our shares on our behalf. So when you boil all of that down, all that transaction down, including brokerage, we've made $2,042 profit, which is not too bad. And as I say, this is very much on the low end of what you'd expect. I want it to be conservative. So that's the sort of thing that you could expect from a renting shares strategy. Now, as I say, in the next few days, I'll come back and we'll come back and we'll actually exit out at some point here, and I'll show you what that would look like in terms of our overall return and actually how to do it. So I hope you found that interesting. Keep an eye out in the next few days. I'll send you another email, and we'll see you then. Bye for now.